What do I have here? Well, over the last few videos, we've been going over 1998. I'm not going to go over that today. We know where we are. We know that's a bullish scenario. So I'm not going to go side by side, Dow Jones on the left, Dow Jones on the right, 1998 versus 2019. What I have here is a weekly chart of the S&P. And I have highlighted the 1998 on the weekly, the S&P here. And you can see the V bottoms, the V bottoms. What did I do here? Well, I wanted to show you how bullish this scenario really was. If I haven't already, with every single video we've done with this bullish, screaming bullish, raging bullish price pattern. Okay? Now, back in 1998, you can see I highlighted, we dipped, and when we got to new highs, we just paused a little bit. Now, do we have to pause up here? No. We said 29.50 was the next goal, and I do believe we're going to easily get there and then some. What did I do here with, what is all these numbers? These are called fib extensions. A lot of times we use fib retracements. Find out where the market has support. In this instance, I just did a fib extension. I drew started here, and I went up to the old highs, and I clicked fib extension, and I wanted to see how far this market really went. Well, it did 100% plus, let's just call it 100%, fib extension. What does that mean? It means if the market went down 200 handles here, it's going to go up 200 handles from old highs. Now, I am not a permabull, but if we do a fib extension, we went from 29.40 to 23.45. So if we see 100% fib extension, let me just make sure this is right afterwards. That's 35.35 on the S&P. 35.35. That's another 20+% on the way up. How long did it take for that to get there? Let's see, 12/27/99, and about another year. It took about another year. So if we look at, we're in April 2019 right now. Is it possible over the next 12 months that we see a 100% fib extension in this market and get above 3,500? Absolutely, it's possible. And not only is it possible, it's probable. There's not too many people out there, and you can, I try not to listen to the media, but I just get senses by people and just flicking through channels sometimes on business channels or even on Twitter. People are in disbelief of the uptrend. They're in disbelief that the market went too far, too fast. When that happens, the market usually continues to grind higher. Now, where there'll be some pullbacks, there is going to be pullbacks. And there's going to be times when we go in downtrends and no trends on our way to 3,500. What did I first call for? 2,900. Then I called for 2,950. So over the next 12 months, as crazy as it sounds, yes, until we diverge from this pattern, I'm going to have to assume that we can get to 3,500 over the next 12 months. I'm going to make sure that fib extension is accurate. Let's just get rid of remove drawings. Let's see here. I thought there was a quick way. There we go. And so if you're using Think or Swim, that's what I use. Let's see here. Go to fib extension, and then you draw, you just touch right there, and then you touch the old highs. And then you can see that fib extension is 35. Let's just call it 35.50. 35.50. And we're trading, let's see, 35.50 minus 29.33 divided by 29.33. That's 21%. Why can't we go 21% higher over the next 12 months? We are not in the profession of predicting the market. What we are supposed to do as traders is follow the trend without emotions, without opinions, and with stops. And we're going to continue to do that. But we also will have a thesis based on historical chart pattern comparisons. And currently, our thesis is that this pattern of 1998 will continue until it doesn't. I've said over and over again, all patterns diverge. Back in 2008, I was short the market heavy with banks. It looked identical to the panic of 1907 that didn't diverge until 18 months. So why can't this one go on 18 months? Well, we don't know. We're not going to predict it. But I will say, until it diverges, we are going to remain in the bull camp versus our levels. Let's talk about those levels real fast. We had the week before OPEX, week before monthly option expiration, numerous times where we talked about pivotal lows in the market, right? This low right here is 2681. Yes. If we would break 2681, that would negate just about any bullish thesis over the next 12 months. Okay? Then we have this next week before OPEX lows, which is 2722. On the daily update, we just happen to raise our stops to that level. We don't want to be long if we get down there and break that, because it's not necessarily ultra bearish. What it's doing is telling us the market's going to be extremely sloppy and we want to pull back the throttle and we don't want to stay ultra long, right? And then we have some pivotal lows here. I'm not sure if this was the week before OPEX or maybe it was right here. And what are these lows? It looks like 2785. Okay. And then we also have this rising 50 SMA. And I said that this gap right here, I personally think is not going to get filled right away. So we have all these support levels. If we start breaking the support levels, we start increasing cash, right? We're not going to be stubbornly bullish. We have a thesis. It's based on market trend, based on trading rules of engagement. The thesis will break when price breaks. And we're not going to predict where price is going other than they have a thesis that it could go up to that fib extension up to 3550, which is 21% higher. If you're in a triple long, that's 63% higher in the SPXL. Well, let's just call it 60% higher. It's a huge return on your money in 12 months if that ends up being accurate. So anyway, I know I just spent a lot of time there with the historical chart pattern comparisons and things like that. I just think it's real important that you understand not to pick a top and to stay long the market.